Hello, traders and members. Steve Vetterell here, FXESTrader.com and Benchmark Wealth Advisors. Welcome to the weekly market review. This is Sunday, the 7th of May, 2017. And I'm going to go through a little bit of the process of how I start off the week as far as the homework or the prep hypotheticals I like to put together, whatever you wish to call it. The important thing is that it is a process, and I am pretty regimented about this. I've got a lot of questions that I get over the course of the last couple of weeks since we did the big webinar, Toast to Traders weekend event. And I figure I'm going to start this particular review off a little bit differently with a review of the process that I go through each day prepping for not only trading of client portfolios on the benchmark side, but also trading in the futures accounts for my other company, as well as some of the family portfolios that we trade. The process doesn't change from week to week. We may layer in different pieces of research to go through the week. Really, the key thing is to understand the biggest picture, or let's call the context of what's going on in the markets, whether it's U.S. indices that you may trade in futures or some sort of ETF, or commodities or currencies that may be traded both either domestically or internationally. The process is really the same. You're going to be looking obviously at different time frames and different snapshots as far as the profile of the market from a broader perspective. But what I think is the missing link for a lot of really educated traders that come to me for education or purchase our course, either the large course, the mini, is that almost all of them that do not have a consistent profitability plan in place, I find probably one of the biggest missing links is they have no process, or they have a process, but it's half-assed. So the beginning of this, I'm going to take, I don't know, maybe 10, 15 minutes and explain what I do each Sunday. Sometimes I'll do a Friday night over the weekend. The key thing is if you're going to be trading Monday morning, whether it be for yourself or for client portfolios, you want to be prepared as far as what's going on. Not only geopolitical events, there's been obviously a lot of that, but a lot of the policy changes that may be coming out of your own individual country. Obviously, I am based in Southern California here, so I'm looking at the policies and the changes coming about with our own administration. Obviously, a large healthcare bill passed just the House on Friday. Still probably got a long road to go through the Senate. Same thing with a tax plan. So these can all bring instability and uneasiness, if you will, and create volatility in the markets. And that's a good thing if you can embrace it. I think the problem this year specific is a lot of the news stories can just come out of nowhere, where we had a little more of a stable environment over the course of the last few years, with most of the dips being purchased and bought up when we've had pullbacks. We have a lot larger potential for volatility, especially since we're trading at all-time highs on most of the developed market indices, especially here in the U.S. So as many of you may have seen, some former students, I have not done a video like this in quite some time. So I really think if you've got the time, sit down and we'll go through exactly what I do. I've changed the trading homework sheet around a little bit, but essentially when I come in through various charts, which I'll go into in the next phase as we review the last 5 days, but I really want to just see what's going on. So as you can see here for the E-mini contract, which is the primary one that myself and my students trade, it's one of the most liquid in the world, next to a couple of the indices on the Eurex. Nothing has the volume the ES does in futures land. So I want to know from a market profile standpoint, what was yesterday's day type? And then I have a IRT Linsoft chart version of this, but you really just want to know what were the last 5 days? Well, what did it look like? Trend days, normal? Was it a normal variation day? If it was a trend day, was it some sort of double distribution, triple distribution, trend day up or down? Being able to gauge all of that. You can even circle this if you wish. The next, I want to look at the open type. what were the last 5 days of the open types, okay? Many different open types. These are all defined in detail. If you just go to the glossary section of my website, FXESTrader.com, I want to know the direction of trade, whether the volume was heavy or not, okay? Obviously noting value area highs and lows, not only for each day, but for the week as a whole, or even the month as a whole. And there are charts that can aggregate those profiles all together. So with all of the prep review, the most important thing is number 4 is the next day's trade expectations. Okay, you want to begin to build a hypothetical, whether it's 1, 2, or 3. Ideally, you want 3 hypotheticals. I'll go through number 5, the overnight inventory. Was it long or short? You know, our traders primarily caught off guard. Now, this particular evening and into late Friday, we had a mostly balanced week, as I had predicted in last week's review. We had obviously a number of gap ups that took place. I expected the previous 5 days, all of last week, primarily to just trade in a balanced range, fairly tight. You know, we saw the trading range, about 20 points of range, all the way down to 77, where we got some good bounce reactions, all the way back up to the new high essentially that we drifted into with ES last Friday. So, but again, just reviewing from a market profile standpoint, and we'll get into that chart here in a bit once I get through this. Look at the gaps, all the naked points of control, both from a volume and a time perspective. Okay. So as you can see, I've just duplicated this. So if you trade something like oil or gold or whatever, you can make notations for whatever other contract, the 6E, so forth. Note the gap rules. Okay. This is the daily checklist. This is essentially page 2. So you're always going to be asking your questions throughout the day. So if I'm talking with buddies on financial media here, you see me active on Twitter a lot with some of the guys that I talk with, big traders, and do a lot of analysis, post some stuff. I'll get into that. I want to find out what's driving the market, the fundamentals, economics, stock specific, right? Or does the market have no conviction? Which is most of last week, right? Even though we had some big name earnings last week from Facebook and Apple, which came in okay. Was there a flight to safety? Other contributing factors. So what's the market condition? Again, notice this is all big picture macro stuff, trying to determine what's the context of the market. Last week, again, context was mostly a balanced market. I think a lot of that was due to the fact that we had French elections, a lot of uncertainty, right? 2 candidates down, Marine Le Pen and Emmanuel Macron. So we need to get past those elections, which essentially is tonight. So we should know tomorrow morning who the next president of France is. Seems like an insignificant thing, right? Well, it's actually been pretty important because there's been a wave of populism moving through both Europe and the United States. And another Brexit potential, especially something as large as France, could certainly be disruptive to the European Union, obviously, which frankly I think is a complete piece of shit, that group, or going into some stability, and maybe Emmanuel is someone that is going to support the European Union. So, you know, all the factors you want to weigh out when you're looking through, both from a top-down perspective as well as bottoms-up. So everything from lows to highs, you know, normal zones. I don't really talk a lot about this because it's pretty much understood throughout the technical analysis community, whether you're a top chartered market technician or you're just a regular analyst. You really want to know where all the zones are in the market, a lot of the low and high volume nodes you guys hear me speak of. So ideally, you just want to get those hypotheticals in place. So once I've gone through filling out most of the sheet, I'll jump into what I research as far as outside. So let's take a look at the first thing I'll take a run through is the calendar of news that breaks. And I want to note most of the red or the high impact events. Okay. Things like retail sales, right? The Friday jobs numbers that comes out at 8:30 New York time. Things like Fed speakers, right? These guys typically haven't had a lot of impact in the past, but that's not to say somebody can't open their mouth with something related to market movements, interest rates, and that can have effect. I really don't want to have large trades on in place of red events. Okay, that's what I call them. So I'll go through the week, and you see we've got Draghi speaking. We've got some rate statements out of Australia, manufacturing production. Notice the U.S. dollar is the currency that I pay most attention to because these are domestic-based news stories. Okay, so I'll go through the whole week, make a note of this. I also subscribe to Hedge Fund Telemetry, which is actually really good. So one of my buddies in New York, Tommy Thornton's a big trader for a fund. They put out this each week to let you know what's going on. Just a quick key focus economic reports. Again, you want to be really aware of this. This brings essentially a list together of all of what I like to call the red reports. Earnings reports, what companies coming out. Keep in mind we're still in earnings season. Can have an impact on the market, albeit it has had less of an effect on markets just in the aggregate over the course of the last few years. It's been much more of other events affecting the market. So I'll go through and see what's going on there. Next, I'll move into headlines. Now, there's many different places to get this. I prefer an aggregated service, whether you're using something like a Bazinga or a briefing.com, any news services you have. I utilize Between the Hedges because I think it just aggregates everything. These guys cover everything. It's awesome. All the headlines, the reviews, scoreboards, there's just a lot of metrics you can get caught up in here. But the important one is going through which sectors in the S&P have done what, who's lagging, who's leading, why. So you can get a feel for not only the performance last week, but the underlying correlations that are important along with bonds and the credit markets to understanding how they can potentially affect, if you're trading the ES as we do, that market. Okay, so it's going to go through everything from gainers, sectors, covers all the news. Sometimes there's a lot more stuff. This is a weekend one, but then I'll go into Twitter. And I sound like a broken record on this, but I gotta tell you, I follow 124 people on Twitter. Of maybe 20 of them are just gold in the information that they put out on Twitter. And one of them is at FXESTrader71. The other one is at Vernaman. It's an ex-floor trader. It's actually really good. This is at FT71's Trader Bite. This is typically about anywhere between 10 to 15 minutes. Comes out at around 9 a.m. Eastern Time, 6 a.m. Pacific. So I'll go through and compare and contrast what I'm thinking as far as hypotheticals to a couple of the other guys and what they're thinking. I'll go through Shadow Trader's site. They have a blog that does, this is their glossary here, but they do an analysis of what's going on from a large standpoint profile. I want to really check that my thinking of what my hypotheticals are is in line with some of the other experts that have very good view. So if you're a Jim Dalton guy or, just like to look at the profile, I want to go through all of that. And again, this may seem like a lot, but you really, up to this point, should take you no more than about 10 to 20 minutes to do. I can rip through this pretty quick. Most of the time I'm spending during the trading day, if things are boring and there's no trade setting up or I'm not adjusting client portfolios for any reason, I'll just go in and poke through a lot of this stuff. And I would suggest if you do want to follow this path, go into the people that I follow on Twitter, especially guys like Chris, okay? You can follow them all, but I really only subscribe to people to follow on Twitter that actually provide real analysis of the futures markets or some of the broad thinkers out there in quant land, especially guys like Cliff Asness, who is a billionaire, nice enough to put a lot of his information on Twitter for us to follow. So that really can bring a mountain of information as far as a lot of the really good stuff that these guys post on Twitter. But the key thing is you'll be able to pick and choose who you feel is putting out some of the best stuff. There's a number of chartered market technicians I follow, Ryan Dietrich being one of them here. Another one is a friend of mine, Mark Newton, Newton Advisors. And ideally, I just want to put together a plan, have my 1 to 3 hypotheticals. So once I've gotten through all that, I want to begin to put together a plan, a process. A number of the questions I've gotten last week were surrounding, what books to read on the subject. There's a number of market psychology books written on trading, like Trading Coaches. Brett Steenbarger, it's a blog that I follow. It's called Trader Feed that you can follow as well. This is probably one of the number one most recommended books that I utilize, Trading in the Zone. This book comes with our larger course. Somebody wants to take our Soup to Nuts trading course. So as far as process, okay, I think that it's important to have gone through everything I did and put together your plan. But during the day as well, especially if you're a new trader and you have never put together a process, I think that it's important that you do trade journaling, okay? Edgewonk, which I utilize occasionally, I do recommend students set up an Edgewonk account. This is probably one of the best trade journaling pieces of software that completely automates the binders and binders of chart printouts I have and notations from the past. I think it's always important to print off charts of where you took trades and what worked and what didn't. That can be a manual process that I still think is important. You could certainly put it into something, some sort of notation or scan them in. With Edgewonk, you have to journal. I have a number of spreadsheets that are journal based up on the cloud for some of our students that go for our full course that you can utilize as well. The breaking out bad here is just it's really the trade grading tool. This is actually really good. You can download the spreadsheet for free. It grades everything. How good's your plan for the day? Is your plan solid enough that you feel it's giving you an A? It's just one of the most important columns that I look at, risk for reward. A lot of times if I have a frustrated student that's gone through all of this and just dove in, and they get past sim trading and they decide to go live and they're trading and they begin to scale up or increase contract size, probably one of the biggest things I'll see when I look through not only trades, but maybe if they're filling out this spreadsheet, which I recommend in the beginning, I'm just seeing a lot of uncertainty and instability around mindset and trading plan when they enter into some of these losing trades. So my first question is always like, why? I mean, really, if you can't say that you have a number 10 on a scale of 1 to 10, you're in a quality or trade plan, and you're a number 5 edge, then why on earth would you be taking risky trades? So this is actually you can download the spreadsheet. It's actually really good. So let's go into the profile and let's review the last 5 days stuck in balance for a period of time. Let's go through what trades based on all of these hypotheticals should have been taken. Okay, so we're in Linsoft's IRT. You can see we're taking a look at the ES, what I call a composite chart. This is a daily candle over the course of whatever period we're looking back, which in this case is a little bit over 50 periods. We're looking back over the last several months, essentially before the run up into the beginning of March. and the subsequent balance area, which has been pretty broad. We'll take a look at this. Keep in mind that I get a lot of questions about this, and this is the S&P mini contract. So in videos, we use this with our students as a primary instrument to define market direction and affect short-term trades when we have a bias in the market. So this is the electronic contract that trades around the clock, what they call the Globex session. But what we're looking at here is what I call the RTH section, regular trading hours. The ES is the name of the futures contract are denoted by two letters. And then if in this particular case I'm using the continuous contract, but the two letters denote the ES, and then they're followed by a number to define the expiration. So as an example, ES is 4 contract periods per year, which expire in March, June, September, and December. So these 4 months are denoted by the letters H, M, U, and Z. So if it was 2012, then the March contract would be called the ESH2. So just keep that in mind. So let's go back and review the last period of time that we've been in this balance area. You can see that since the beginning of March, we've run just a little bit more than 2 months inside of this balance range. High points being touched on the run-up subsequently, and then last Friday afternoon where we had a slow grind up into the high off of Thursday's candle, where we had a quick rejection reverse, not in the opening, but just as the rejection, then we reversed up. It wasn't the opening type. Couple things of point here. You can see that the high and low volume nodes, what I like to call the peaks and the valleys, I do get questions about these. So the high volume node is an area inside of a market profile or a volume profile where a very large amount of volume is traded, what I like to call the peaks, where you can see here. The valleys are the low volume nodes. So the areas, the valleys are typically where there's no value, and they are often areas of rejection. So markets can reverse at low volume nodes, and consequently you can also reverse at high volume nodes too. And they provide a center point for points of control, which we'll look at. So, but this is the composite, and we're looking at all volume shaded in blue here on the right since the last 2 months. So everything that's traded up here. And again, Friday we closed late in the day, up 13.5 points on the ES. The reversal from Thursday's rejection off of a very important area down here between 78 and 75. This whole 3-point range right in this area right here has been a buy point. Albeit we haven't touched it that many times over the last 5 days. It's been a buy point off of the bottom of this balance range that we've been in over the course of the last 9 days. Now, as I mentioned earlier, we had the elections this weekend, so it really wasn't surprising to me that we were going to probably try and run the shorts out of Dodge in an actual end of the week run. I didn't expect it to start so late, and I certainly didn't expect it to be on lower volume. As you can see at the bottom of this chart, we're running about 1 million contracts a day traded on the ES, which is historically low in terms of the average. But if you look at just this year, it's a little bit below average. I don't have a moving average line on here. I had one. I don't know what happened. It must have gone away somewhere. You could put a moving average line in this just so you can see where we are as far as volume. But I don't read much into what took place late Friday. Now, a break of this balance area, I can show you when we go into the detailed each day profile. It did present an opportunity for a breakout long, but it was very late in the day on Friday. And historically and statistically speaking, those type of trades have a very low win rate, especially on lower volume. But not a surprise, pushing the market up towards the high in anticipation of what I expect to be a gap opening tomorrow up. Now, I could be wrong, but we'll have a new president in France, and even though to most of the residents of the United States this doesn't really seem like that big of a deal, there's been a lot of cash sitting on the sidelines in anticipation for this event to be finalized. So remember, the market hates uncertainty and it loves certainty. So I would expect a gap up beyond 2,400, and from there it's it's all bets off. It really is. I mean, I know a lot of the purpose of this video is to build hypotheticals 1, 2, and 3, but I'm always going to warn you guys when most of those hypos that you will put together, albeit they may be rooted in sound technical analysis, you still have huge exogenous and global events like this election that's going to completely throw that plan out the window. So let it be a teaching experience of tomorrow. I'm probably going to be off of most trades unless something's just a complete gimme. Like if we gap up what's called an outside in trade and have a open test higher and then a drive lower back into this range, there's probably going to be a good chance that we'll traverse a good chunk of this entire approximate 20-point range over the last 9 days. So that's just my assessment looking at this. I also have overlaid on here the Fibonacci. You can start these fibs from wherever you want. I have it from the first bottom of the gap running all the way obviously to the high. No surprise that if you look at the 68 retrace, very, very good level along with a whole bunch of other stuff. This was one of the most major confluence areas. There was almost everything lining up in this 3-point zone down here. That was a reason to take almost all 4 of these longs that have presented themselves over the last 2 weeks. So certainly from an extreme out, is what I teach students to take as some of the first trades on a non-trend day or a balancing type of, is to take these extreme outs. All 3 of these paid. And obviously this one was last week, but these 2 the previous week, but these 2 late last week were both buy points that we took. Had a pretty decent run on them. And that's really just a value area high and low or a balance area high and low type trade. There's 12 other plus trade setups related to the way I trade. But that was a good example of just trading what's called the ping pong or the zigzag of the highs and lows of this particular range. What else do we want to take away from this? I mean, certainly we could run some fib. Let me just reset this for us. On just the last, let's do the last 50 bars. Take a look at that as well. Okay, so you're looking at it from the whole period of time. We've been up in this balance area here. And again, another important fib level showed up right inside that 3-point zone. It was a 79 area of 76 retrace of the entire move. Again, providing support along with numerous other types of confluence, in addition to a low volume node at 74, high volume node right up towards the bottom of that range. So I always like to take a look at the composite. Let's move to the day types chart so we can see what took place. Okay, remember we had a couple of trend days. Remember again, we're just looking at the session 2 or the RTH. This does not include Globex. So if you look over the course of the last 2 weeks, we've been in this balance range. See, Friday we had a neutral extreme day. Thursday was a normal variation day, and Wednesday was a neutral day. Then we had a normal. I don't really see a lot of normal days, opening and trading. Really not a lot of tells here other than just, we spent some time in balance. It's probably a good chance now that we've logged, what are we, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Was that 11 days without a trend day? So we're overdue for a trend day, and that's probably one of the easiest things to spot, that we spent some time balancing, and we certainly have an event tonight. Regardless of who wins the election of the two, that is a big event, so we could certainly have a trend day. I don't really have an edge for tomorrow as far as the hypotheticals I want to try and build. But if we can trade gap up, again, just looking at this, just like the composite trade back down inside this range, I would love to see an open test and then drive down inside the range. And we have all our levels inside that we'll get into more detail with. But just looking at the broader picture, that would be one of my primary hypotheticals. Let's take a look at the weekly profile. This is not the TPO, but this is just a colored range. I have a couple students said they like this, but they don't find it nearly as useful as the weekly, monthly profile. I'd have a tendency to agree. I mean, I usually just utilize this for just a broad color, see if there's anything that stands out. Okay, obviously the points of control are being carried through. 85 is obviously an important level from the perspective of the last 2 weeks, right? It was almost the center point of both of these points of control from a time perspective. The volume perspective point of control is not on this chart. So I don't really glean a lot from that. I spent more time on this one. This is the weekly monthly profile. And this particular one, I have it broken out into month. So here's May leading up. Here's April. And here's March. So you can see where, again, this 85 level is important from the standpoint of, I should say, the zone of 85 area from the point of control from the whole month standpoint so far. In terms of the month of April, so you can see how we traded in there. Let me just also note this. We'll get into each day, but notice that, and normally I would, especially if this single had been formed at 98 or something like that, it would have on a higher volume day, not a lower volume day like Friday, this would carry a lot more weight. But it's always important to note when singles form, this is a single black line, on a larger time frame chart. It can be an area of, in this case, we spent a lot of time balancing, broke through late Friday the upper end of the balance area, which was the 93 zone area, and we formed a single. Oftentimes that is a tell of other time frame players, essentially big money, coming in to take the market higher. And a lot of these larger players, which are very rarely present in an important ending of a week on Friday, and you really don't have large institutions coming in and doing large chunks of buying in front of a huge macro event in terms of the French elections. What else can we glean from this? So tight week, and keep in mind that don't pay as much attention to the color changes of the upper versus lowercase. You can actually split these profiles out. So it's just essentially showing each day, it'll run through the alphabet in caps, and then it'll run through the whole alphabet in lowercase, just so you can sort of see them split out. So we got our point of control, we got our ranges. Maybe note let me just toggle all these back. Note the value areas, which is the magenta line. This is on a time base, and then the brown brackets are the volume. Pretty closely overlap each other. I really wouldn't worry about getting too much into the levels down here. We need to see a pretty good rejection and reverse in the beginning of this week for me to even be looking or paying a lot of attention to levels down here. For now, let's just lose it at how important the 75 to 78 zone is as far as support so far. We break that, it's all bets off, and we can certainly continue to look to lower levels just as I've described, but for the purposes of just this review. There's a lot of different takeaways that can come from these market profile charts. I don't expect to cover them all. Sometimes things will dawn on me as I'm looking at that I may not have caught in the weekend review, and that's fine. Key is just understanding what's going on as far as context. else? Type value area, high and low range. Yeah, it's good enough for that. Let's take a look at the last week each day. Keep in mind this is just an RTH, no Globex. Again, red bracket that you see here. Notice I don't like to write on my charts because it's hard to keep erasing stuff here, but just follow my cursor arrow if you can. The red bracket is the initial balance. It's the first hour's movement, 9:30 to 10:30 Eastern time. Okay. The yellow, and these are just extensions. This is called, the yellow is the 1.5 times the IB. And then the green, whatever the hell you call this color, is a 2 times the IB. Used to be a lot of trade setups based on that and market profile in the past. You know, hey, if these areas line up with some larger group of stuff in an area of context, that's fine. But I don't take trades based off the initial balance. I don't take trades off the opening range. Notice it's not even set up. The open range trade used to be popular. It was the first minute of open. But with a lot of the algorithms the last 10 years, I've been much less interested in taking that type of trade, set up the opening range. So each of these blue zeros, O's, whatever you want to call them, is the opening of that particular bracket. So I know this seems confusing, but let's just split the profile out. Just pretend each of these are not alphabet. It's just a solid bar. And I call it a bracket, but it's also a bar of 30 minutes of trading. That's the profile broken out. I like to start it with D bracket. So essentially we opened up on Friday and we it was essentially we opened an auction out of range. So we were out of the previous day's range. So as far as the open type, it's open and was auctioned out of range. And we came back down and tested inside range. We found a lot of support at the previous day's value area high. This is this magenta bracket right here. That brought us into some support. And then very late in the day, much to my surprise, we had a slow grind up. And then we went and ran a whole pile of stops towards the end of the day. Now I've started with Friday because this is a great example of, yes, we did break above the range that has been somewhat established with the exception of the 26th here. We broke above the highest part of the range, and you'll often have a lot of trading educators will buy what's called a breakout. I prefer to buy the retest of the breakout, and only in either case if it's on large volume and not just running stops volume. Because, you know, I mean, certainly this trade would have worked had you bought the breakout, but you would have had to have, in my opinion, from a risk management standpoint, had a very tight stop. I mean, literally probably like 3 or 4 ticks inside of this. And if we ticked inside of it without a lot of volume, ticking back down underneath 93 to maybe the developing value area highs it was building out, you know, I may have taken a shot, especially if it had come on low volume. But oftentimes you'll have breakout traders buying this breakout and they don't understand market profile, they don't understand order flow, and it's usually a fake out. So in many cases, you know, we'll run stops, which oftentimes you usually find me taking the opposite side of this trade and executing a short way up here because I just see an absolute, what I like to call flash of, you know, stops, but there's really no initiative buying above this level. And then the market will reverse in many cases, just crash back down through this and usually get good movements off of that type of setup. So contrary to what is taught, I don't really take a lot of these. If I do take this type of breakout, it is going to be in a smaller contract size and it's going to be with a very tight stop. So that was the end of the week. So if we go back and start with let's start with Monday. So I toggle this to split out so you can see what each of these 30-minute brackets, bars, whatever you want to call them, plays out. Remember, each time you want to walk through what the market do. In this case, again, we were opening and auctioning in range from Friday. So Monday's open and auction in range, came back down to this level, bounced around. In my opinion, this was your only chance for a trade on Monday. I would not have taken any of this chop. Yes, we got down to the 80 level, but we didn't get down anywhere near what I would have wanted to have seen to take anything near a sizable trade. This was the only trade, in my opinion. If you caught this, good luck, and I hope it worked for you. It did not work because I didn't get a fill. I wanted to see a little higher. Going into Tuesday, again, an open. Split the profile out. Tuesday, we opened up auction near the value area high. And it was in range. I'm sorry, we opened auction in range and drove up to the yesterday's value area high. Again, this is this bar right here. And then we moved down. Again, just chopping broccoli here through most of the day. Trades I just wouldn't have taken because I didn't get filled. I really, if I take trades inside this area, it's related to some sort of quick news event, flash. Then obviously we had the jobs numbers on Friday morning, but that was before the market opened at 8:30. But any type of major news event that just gets a complete overreaction that would have taken us up near the 90 to 93 area or down to the 78, 75 level would be trades that I would have taken. I very rarely get caught in the chip chop. I hate it. So I'd rather wait. These opportunities always present themselves. Sure, you may not be trading in one day. You may not have put a trade on in 2 days. And that's fine. Think of all the people that were impatient traders, the ones that are unprofitable that just had to make a trade. And they went in and got caught up in the chop where there was no real edge because you weren't at some extreme level, which I far prefer. So I don't see any trades on Wednesday. If we go into Thursday, now, this is a good example since we opened auction in range, right? Here's the open. I guess arguably we were opening and auctioning out of range by a tick, but I don't really look at it that way. We're essentially still opening in the range we've been in for the past couple of days. Not as important to just compare it to the previous day's range as it is a setback of a series of range of days. But we opened an auction in range and spent the first 2 hours just sort of trying to find the meat. Now, obviously, there was some news that broke at this point out of DC that brought us down in a swift, what I like to call a flashy, crashy move. Okay, I'm not going to get into the footprint or the delta print down here, but we had some literally just running stops and it found really no selling below this area from an order flow standpoint. This was one of the first larger size trades I've taken in a couple of weeks. And I rode this thing up for over 10 points. But the reason to take this trade is it's the first time we flashed down in this zone, right? This, and here's another great example. If I'm going to draw a line across here, so just imagine in a line drawn across here, right at the bottom of the bottom of that first day after the big gap up from the whatever the hell you call that, the initial election thing in France. We had, this is usually a support point, okay? The fact that we peaked below it and blasted out some stops, and we've been in a buy the dip situation for, 5 years now? 5+ years now off of the March 09 bottom. I really would have wanted to get on this trade. And this is even one of those trades where, sure, you may have executed perfectly and got filled on this and been a little disillusioned when it already dropped a couple points. I'd have been adding the whole way down because this is probably going to see a bounce. The 10-point rule usually applies to this kind of stuff. over the course of that day, or just a few brackets in some cases, that you'll have a rip down into an area and then a bounce off that of 10 points before another reversal takes place, which is almost perfectly what happened here. 75. So one tick over 10 points there, and then we reversed. Now, also with this type of trade, a K bracket could have represented what's called a slingshot. So even though you missed that, there's a chance that we're going to go back up into, got to the, on the move back up to H bracket here, we came to the previous day and a whole bunch of other stuff, value areas, lows of many of these sessions. And that could have been another shot. That could have been a shot at short. Yeah, probably not the best risk reward. This would have been at the bottom of K bracket here at 78.50. This would have been a shot at a slingshot. By the way, for those electronic local fans down here, this is a great example of what I call a 300 hook in terms of outside of Bollinger Bands or Keltner channels, whatever you want to call that stretch of some sort of standard deviation down there. This was based on that as well. So we also had a 200 hook down here that I took. Same parameters. Opened, auctioning in range, not of the previous day, but of this set of days. Okay. Had a test higher, and then a move lower over 1, 2, 3, 4, 5 brackets. Is that right? 4 brackets. Then we had some more news breaking a little bit later in the day because we're on I bracket. Came right back down and the same thing happened. So the market likes to repeat itself, right? Problem is, too many of these into this area, and essentially they're going to fail, and this area will essentially break, which I would expect if we're going to reverse this week and not rip higher, and we're going to reverse back into this range. We go back down and test this area again. May take a shot at it, but this area it's getting old, and there's a chance that we could break below that. So statistically, especially with an outside opening tomorrow and a gap up and then a reversal, right? Because we have certainty. So oftentimes institutional investors, when certainty shows itself in the form of news or some big event taking place, it'll usually begin some sort of movement. So if the market is sitting on a lot of cash and we continue to rip higher, 2,400 could be, especially if it comes out in volume tomorrow or the next day or two, I should say, then that could definitely set 2,400 up at the high as a support point. I would prefer, just because I think this market's overbought since the election, I would prefer to see it open up and set a hanging man or a island reversal daily candle, get back down inside this balance area, and then traverse this all the way down and test this low, which may bounce the first time. We come back down against it again, I doubt it's going to hold, in which case we have a whole new set of numbers to look at below 75. Well, we'll cross that bridge when we come to it. So, again, you'll rarely see me in these reviews, especially since we have a lot of beginning members with the FXESTrader course members and our Edge mini course. I don't want to get into the minutia of what trades that should be taken inside this, because you really got to be a seasoned pro to be trading inside the chop, and a lot of that depends on a whole mess of other factors outside of just simple market profile analysis. So we've covered the last 5 days. If there's something I've missed or any questions you guys have, you can certainly send me an email, steve@FXESTrader.com. We've got our hypothetical for next week. Let's hope I'm right. Have a good weekend.